Hi friends, welcome to Auditology. I'm your friend, your host, CA Niket Thacker. Now today we'll be discussing a very interesting term named as sampling risk. We'll be discussing a term called as sampling risk. Now before I move on to the term, I have a very exciting news to share with all of you. Let's see the news first. We are starting a new batch at Unacademy and this is for CA Intermediate Group 2. This is for CA Inter, not final. CA Inter Group 2 batch. I'll be taking auditing and assurance in that. This batch is for May 22 and November 22 examination. It's a comprehensive batch covering entire syllabus. The batch is starting from 5th of January 22 and this batch will be in Hindi-English mix. I repeat, this batch, the language will be Hindi-English mix. So which are the faculties? All star faculties from across India are there for you. J.S. Batra sir is a very well-known faculty in Northern India. He'll be taking EISSM. Rahul Malkhan sir is from Bombay. He'll be taking Advanced Accounting. I'll be taking your Auditing and Assurance. And Aditya sir, again a North Indian faculty. He'll be taking your FM and Economics. So 4 subjects and daily you will have lecture of each of the subjects. Imagine daily 2 hours each subject you are doing. Sundays will be off for you. Sundays will plan only for the test series. So indirectly 7 to 8 hours a day you are studying. And as you are studying 7 to 8 hours a day, your course will be getting completed on a timely basis. The 5th of January we are starting this batch and definitely this will get over 2 months before your examination. And the best benefits on Unacademy, 1 subscriptions, you have lots of benefit. You can attend live classes. By chance you miss any of the live classes, you have an option to watch the recorded ones, unlimited viewing right for recorded ones. Multiple educators are there for different subjects. Choose the educator which you like. Definitely doubt solving sessions are conducted and your mock test series are also there. So we will meet on 5th of January. Do share about this with all your friends as well. Now coming to today's term. Sampling risk. Now we all know that whenever we are doing an audit, we don't have that much time. And as we don't have that much time, we go for sampling. So sampling means you check less than 100% of population. See, if I check 80%, that is also sampling. If I check 60%, that is also sampling. And if I check 30%, that is also sampling. Now, whenever I go for sampling, there is some risk involved. So what is that risk? Sampling risk. Sampling risk is the risk that auditor's opinion based on sample. You come to a conclusion by checking a sample will be different if the entire population was subject to audit. If you had checked the entire population, your opinion would have came different. You came with a clean opinion, you would have came with modified, or you came with modified, you would have came with clean. That's called sampling risk. Sampling risk is the risk that auditor's opinion, which is based on sample, would be different if the conclusion was based on entire population. Now, the sampling risk is further divided like this. Now, tell me, either we are checking controls. Okay, we check the internal controls, that's called as compliance procedure, or we are checking the data, the figures, sales, purchase, expense, income, assets, liability, that's substantive procedure. Now, say for example, in an entire population, out of 100, there are 10 errors. In an entire population, out of 100, there are 10 errors. So can I say in a population, there are 10% errors? Now, suppose you checked a sample of 40. And sample 40 mein you found only 2 errors. Aapke sample 40 mein there are 2 errors. So can I say you found 40 mein se 2, 5%? In population, there is 10% error, but in the sample which you check, you found 5% error. So percentage of fraud or error which you found in sample is less than population, or it can be more than population. Like in 40, you found 6 errors. If I found 6 errors in 40, that's called 15%. In population, there is total 10 percentage wise. I'm talking percentage, not absolute term. The population may out of 100, there are 10 errors. 40 you checked. 40 may you find 2, so that's 5%. 40 may you found 6, that's 15%. Now suppose in a sample you found less percentage error. In a sample you found less errors than the population. Now tell me, you are checking controls. If you are checking controls and you found there are lesser errors, what do you feel? Controls are working effectively or not effectively. In a sample, you found lesser errors, you are checking control. So you will feel controls are more effective than they actually are. Because you found lesser errors, you will feel controls are more effective than they actually are. Okay, if you found more errors in a sample, you will feel controls are less effective than they actually are. So if I'm doing compliance procedures, samples mein errors I'm getting less, so I'll feel controls are more effective than they actually are. And samples mein if I find more errors, I'll feel the controls are less effective than they actually are. This will be the erroneous conclusion which will come up. Now, suppose I'm doing substantive procedure. I'm checking some figures. Now, if I'm checking a figure and in a sample, I find lesser misstatement. So I feel material misstatements do not exist when they in fact exist. The sample me, if you find lesser errors, you will feel material misstatement is not there. Actually, it was there. If you find lesser errors, you are doing substantive procedures, you feel material misstatement does not exist when it in fact exists. And if in sample you found more errors, okay, 40 may say I found 6 errors. If I find more errors, I will feel material misstatement exist when in fact it does not exist. So if you find lesser errors in sample, you find things are well, actually they are not well. And if you find more errors in sample, you find things are not well, but actually they were not that bad. This is nothing but the erroneous conclusion which comes up. Now just pay attention. If in a sample you found more errors, so you feel controls are not effective. You feel material misstatements are there. If you feel controls are not effective, material misstatements are there, can I say you will do some extra checking? If controls are not effective, material misstatements are there, I'll do some extra checking. I'll increase my scope of checking. So second category, if I find more errors in sample compared to population, my checking gets increased. But if I find less errors, in sample, I think, oh, controls are working well, material misstatements are not there. Oh, so I'll give a clean report. Oh, wahan pe my report goes wrong. So under the second one, if I find more errors in sample, it will lead to more checking. I will have to check more because I feel controls are not good. But under first case, if I feel there are lesser errors in sample, arre baap re, if sample mein less errors are there, I feel things are fine, no material misstatement, I'll give up a clean report. This will lead to erroneous reporting. The auditor is more concerned about the first wala thing. You find less errors in sample. If you find less errors, you'll feel things are fine, you'll give a clean report. That becomes a problem for you. This is nothing but the word sampling risk. The sampling risk is a risk that auditor's opinion based on sample would be different if the opinion was based on entire population. Practically, nobody knows how much errors are there in entire population. Check kisne kiya hai? Nobody knows actually the errors in entire population. This was just for giving example. Population mein 10%, sample mein you find 5% or you find 15%. So there's a sampling risk. But that's just for telling you. Now, sir, how do I reduce the sampling risk? Opinion based on sample, opinion based on overall population should not be different. Do one thing, check more. If you check 80%, opinion going different, uske chances are less. If you check 30%, opinion going different, uske chances are more. If you want to reduce sampling risk, increase sample size. So there's a inverse relationship. Repeat, there's an inverse relationship between sample size and sampling risk. If you increase the sample size, your sampling risk, opinion being different, will go down. So I hope you are clear with the term sampling risk. I'll come out again with the new term next time. If you have any terms which you want me to discuss, just write it in the chat box. Do subscribe to our channel, share it with your friends, and yes, 5th of January, I'm starting CA Inter Auditing batch. So share about that with your friends as well. Bye-bye. Take care.